Meet Rahul. Rahul has decided to start investing his money. His friends said mutual funds are a great option to grow wealth. But Rahul doesn't know what mutual funds are or how they work. Fortunately, we are here to help him and you. Let's get started. A mutual fund is an investment vehicle where many investors pool in their money to buy stocks, bonds, or assets. Imagine a 12-inch pizza as a mutual fund. Each ingredient used in this pizza would be considered a stock. Like how a pizza can be made with different toppings, bases, and baked in different styles, a mutual fund is made up of different stocks. All the different stocks in a mutual fund make up what we call the portfolio. The type of securities within a mutual fund makes it either an equity or a debt fund. This is called the scheme. If Rahul wants to pick a fund to invest in, he would have to check the scheme based on the goals he wants to achieve with the investment. Once Rahul and other investors like Rahul has decided on a scheme he is willing to invest in, he contacts a fund manager. A fund manager helps Rahul and the others invest in the mutual funds of choice, maintains its portfolio, and distributes the funds. The distribution is done based on the amount of money they are each willing to pay and the NAV of each mutual fund. What is NAV and how is it calculated? NAV stands for Net Asset Value. NAV is the market value of a single unit of a mutual fund. In order to make this easier to understand, let's go back to the pizza example. In the pizza that Rahul wants to get, each ingredient or stock has a certain value. For example, tomatoes cost 10 rupees, flour 40 rupees, cheese 50 rupees, and so on. The combined value of these stocks contributes to calculating the NAV of the single unit of a mutual fund. Right now, the NAV of a single unit equals to 100 rupees. If Rahul invests 1000 rupees, the fund manager will give him 10 units of that mutual fund. But the NAV keeps changing every day because of the change in the market value of each security in the portfolio. Now, in the real world, there are over 6,000 mutual funds that we can choose from. And not all of them are the best. Some might even be terrible. How does an investor know which mutual fund to have? That's where Scripbox comes in. With its proprietary algorithm, suggests mutual funds that are most apt for your requirements and goals. All you need to do is pick what kind of mutual fund you want and the amount you want to invest. It tracks your investments and makes your money grow while you sit back and relax.